So this afternoon we had a very interesting panel at the Peterson Institute for International Economics, where we debated the future of the development architecture. And of course, this development architecture is becoming increasingly multi-layered. There is, of course, at the national level, there are bilateral relationships between each donor and its own recipients. And then there is a sub-regional dimension, like for instance CAF, the Andean Development Bank. It's a bank owned by 16 Latin American countries. It's a relatively small bank, but very successful in its own right. And then there is the regional dimension. There is the Inter-American Development Bank. There is the African Development Bank. And finally, at the end of the spectrum, there is the World Bank. So the whole conversation focused what are the pros and cons, how can we strengthen the development finance architecture in a way that these institutions can discharge their maximum effectiveness while not duplicating themselves. And I think the main point was, on the one hand, you need, of course, more ownership by members. For an institution like the World Bank, with the 188 members, this is an inherent challenge. And we have seen with the failure by the US Congress to ratify IMF governance reform that further governance reforms in these multilateral organizations is going to look increasingly difficult. And then there is also, as the world economy becomes more globalized, the demand for local, sub-regional, regional expertise increases. And this is really, in a way, the raison d'etre of a number of sub-regional and regional organizations. So we see that differently from the Bretton Woods conference, where the IMF and the World Bank were established 70 years ago, we see now increasing competition. We see an increasing multitude of development actors, both within the official sector, as well as between the official sector and new emerging donors like private philanthropists, like providers of remittances, as well as new donors in their own right. What were essentially the policy prescriptions that came out from this meeting? Well, first of all, it's important that each organization focuses on its own expertise, how to provide greater value added. The president of the EBRD noted that as they expand their geographical reach, where other regional banks are also active, of course the EBRD had to develop a new set of services, new packages that would not simply replicate what other organizations already offer. So this is one point, try to bring greater value added, greater expertise. And then, of course, at the other end, you also need some form of coordination. So how can you coordinate this increasing multitude of actors? And I think here, I'm afraid the meeting was successful in raising the issues, but it was really difficult to pinpoint a solution, because the way you can coordinate this increasing number of actors is essentially fourfold. On the one hand, at the most elementary level, you can have a mutual exchange of information, and then you can have subsidiarity. That is, the organization that at the lowest level that can be more effective takes the initiative. And then there is co-lending, which implies consistent lending standards among organizations. But this would entail to say that the new development BRICS Bank should follow the lending standards of the Asian Development Bank, which is exactly the reason why the new BRICS Development Bank is being established. And then finally, at the end of the spectrum, you have joint lending, which presupposes identical standards, identical lending frameworks. So in a way, it's even more ambitious on the one hand. On the other hand, it would completely void the benefits of increasing competition.